Hey guys, Taylor with GammaEdge here, coming at you with a post-market recap for March 20th, 2025. As you can see today, inside day of prior day, choppy price action, not able to clear our transition zone. So let's get into pre-market prep on how we found those. So here, looking at the market trend model, and just to plug the newsletter real quick, it's free. Go to GammaEdge.us/education. You can sign up for the pre-market prep. Send it to you every day. Starting out with our market trend model. Came in the day, just from a market trend model perspective, slightly bullish, cautiously optimistic. The reason for that is the cumulative tick, which again is built off the tick index, which is a measurement of just kind of real-time buying and selling in the market. This was trending higher into the close yesterday above what we call railroad tracks, which is effectively just a short-term moving average ribbon. So this kind of signature is exactly what you want to see. Railroad tracks moving higher, the cumulative tick trending higher. And then yesterday, we got some sideways consolidation action, but we ended the day constructive, trending higher. However, once we start digging into the SPX contracts, is the reason why we were cautiously optimistic. The reason being is we still were put dominated above and below spot price. We've not seen really any of that thaw out yet. And then additionally, we're still below all the key transition zones. This is SPX-A for what it's worth. Going to SPX-P, remember SPX-A, those are the monthlies or the quarterlies. SPX-P, this is where, 0DT weekly expirations are, a lot higher turnover, a bit more speculative here. A bit of the same story though here, just looking at, 9 delta, put dominated above spot price. We have mixed below spot price, and then still in an overall kind of put dominated environment. And then on the SPXP complex, 5680, 5675. This is kind of our key transition zone line on the sand of the downside. Again, today unable to clear that. Or let me better say, we were able to clear that intraday, but we settled below that level. So now getting into the chart itself. Just kidding, need to review the SPX 0DT structure real quick. Here we have our DEX and our GEX transition zones here highlighted in the purple, and then in the teal is our drunken sailor range. And then there's actually a long iron condor present in the structure today that we wanted to note here. This defined the upper and the lower part of our drunken sailor range. And just as a reminder, our transition zones, drunken sailor range, is where we expect more intraday price action and volume within the SPX 0DT complex to impact how spot price moves. And then once we're able to break through our transition zone, this is where we expect much more of the kind of the moneyness of the options, market maker, dealer dynamics to play more of an impact in addition to the volume in driving spot price. So now getting to the chart here, we can see again, drunken sailor range, we have this in the purple, the DEX transition, we have this in the teal. And really today's price actions can be contained within the DEX transition zone, really never able to materially break away either to the upside or the downside in this zone. Now, you know that we love our volume analysis, so we need to hit on this real quick. I'm not going to do the whole blurred slider thing today. We're just going to get right to it. So early in the session, what we could see is that there's a bit of a cap put on the upside of the market. Reason for that is we were not seeing a material expansion in call speculation higher. So, this happened the other day too, where we're talking about there's a bit of cap on the market. And then throughout the rest of the day, we just saw a continuous trending down in the call side, which again told us there was no real reason to be super bullish on the day. And then the put side, was starting to gradually move lower as well. So that kind of, created just kind of this gradual downdraft in the market. And then connecting that to the market trend model, here we are for Thursday's price action. Yes, we got that little bit of a push higher, but it kind of mirrors what we saw in the vol in command, which is our volume analysis, right? Is, we were never able to really push higher, did not see any material filter take buying or selling, which is kind of a gauge of large buying and selling in the market with plus or minus tick readings. And then we saw just kind of this gradual kind of linear action down on the day, which was not constructive to see. And then VWAP, which is this black line, this was relatively flat on the day as well. So, choppy action was not unsurprising there. So again, just to recap, SPX, this is the 5-minute chart, our transition zones. Spot price was really never able to break materially away. Looking at the volume command as well, there's really no material impulse one way or another in price action day as well too. So choppy price action. The reason this is important is because it could inform our intraday trading and, really not trying to swing for a home run, but just taking those base hits today. Or, if you're a trending type trader, just understanding that the move just was not in the market today. Or, we had some people in the room that were successful selling credit spreads on both sides of this. So, there's a bunch of different ways. Once you kind of understand what the character of the market is for the day, you can understand kind of those trading strategies to put on, and our tools are helpful with doing that. So with that, have a good night, and we'll see you all tomorrow. Thanks. Bye.